What is happening to Ethereum is not a breakout, it's not a breakdown, it's something else. It appears as if there is an invisible ceiling for the major speculative cryptocurrencies. For Ethereum, it's close to $5,000. For Solana, it's close to $270. But in this video, we are not just going to draw random lines on charts, even though every now and then they can become self-fulfilling prophecies. If enough people think that Ethereum is cheap at $1,600, we might bounce. So that's an additional loss from here of roughly 22%. But the problem with approaches like this is that they are very subjective and we can't backtest them. We can't really simulate how would we have decided in the past. And so that makes this approach rather vulnerable. Instead, I like to use moving averages. To be more specific, the moving average that historically worked the best. The problem is, even though when we use that approach to bet on rising prices when we are above, bet on falling prices when we are below, that currently we seem to be very far extended from the moving average. So does it still make sense to be bearish on ETH, to sell ETH when we are so far away from this potential buying signal? We could, in theory, rally by more than 30% and still not be convinced that there's no more negative momentum. So let's have a look at how far the current price is away from the moving average, the historically best moving average. So that's what we see here with this squiggly line at the bottom. 1 is the reference value. So whenever we cross 1, that means we are crossing the best moving average. There's been one instance where we fell more than 50% below the moving average. That was during COVID. That was a once in a lifetime event. And all the other major extensions below happened in the early days. So pre-COVID, when Ethereum was still comparatively small, when it was still very new and volatile. So really, post the COVID crash, most of the times we tended to extend as per maximum between 25 and 30% roughly. We rarely see sell-offs that are as quick as the current one. And the chances are extremely high that we are going to bounce. Now there are two ways to bounce on this chart. The first way is that we simply see a very quick price appreciation. But the second way is that we just continue to trade sideways for a while until the moving average gets closer to the current price level again. What this chart implies though is that it's unlikely that we're going to crash very quick and very aggressively from here. We are either seeing a quick recovery or we are going sideways for a while, or a very slow bleed. This here is likely not going to happen. We might move to the side or we might decline slowly. And then over time, the moving average gets closer and closer to the price. We all know why this is happening. Ethereum bounced very nicely since the middle of April of 2025. And that was because of Tom Lee buying a lot of Ethereum supply. Ethereum dominance more than doubled. Ethereum outperformed the rest of crypto. Tom Lee's BitMine continues to stack Ethereum, but those purchases have slowed down quite a bit. If we remove BitMine from this chart, we just look at the other treasury companies, they have already stopped buying at the beginning of September of last year. And that's really when the rally here stopped. Our prediction that we're going to get rejected from this resistance, that's both for the dominance chart, it's also for the Ethereum relative to Bitcoin chart. It was bang on. It came exactly as we anticipated. By the way, the premium members of this channel opened a short around this point here. And so this chart implies the exact same thing. We might bounce very quickly, or alternatively lose slowly. It's unlikely that we're going to crash very quickly from here. In other words, the pace at which Ethereum is selling off is likely going to slow down. Still, ETH relative to the smaller altcoins, so this is the ETH market cap relative to others, that's all the altcoins that are not in the top 10, it's still not necessarily cheap. We have anticipated an underperformance of ETH, even relative to the smaller altcoins. The dotted line, that's the average ratio of ETH relative to the alts. We are below that equilibrium price, but currently the momentum is of course negative. So I do think it's more likely than not that ETH will continue to do worse than the altcoin. Here's a slightly different measure. This is the Ethereum market cap relative to total 3 ES. Total 3 is all of cryptocurrency except Bitcoin and ETH. ES also excludes the stable coins. So all of crypto, but Bitcoin, Ethereum and stables, it tends to trade also in a somewhat consistent range for the last 8 years. The equilibrium price is the dotted line over here. And this chart implies a potential further underperformance of ETH by another 39%. Potentially 45%. The fundamental problem is that Ethereum is the driver of the entire altcoin market. When Ethereum is going down, then the altcoins come down with it. And yes, you can try to pick the 1, 2 or 3 winners in a market like this, but I do not recommend that. Just have a look at how much Ethereum, so that's the blue line, is correlated with the others market cap. So the altcoins that are not in the top 10. The two assets tend to move in the same direction at the same time. There is strong correlation. And so timing the macro picture is incredibly important. Not just for Ethereum, but also for the altcoins. And the way I time this is with best moving averages. We want to bet on rising prices whenever we are above the moving average. We want to bet on falling prices whenever we are below the moving average. I'm doing this for Ethereum. I'm also doing this for Bitcoin. People have really forgotten how volatile Ethereum can be. And this is what makes it such a good candidate for trend following strategies like this. From top to bottom, ETH at one point has lost 94% of its value. You put in $10,000, you get back $600. But that also means when we buy low and sell high, we can have multiple thousands of percent in return. Market timing is even more important for Ethereum than it is for Bitcoin. But then of course there's the question, what moving average should we use for such a strategy? Should it be the 200-day? Should it be the 150-day? Should it be, say, the 100-day? What kind of moving average duration works the best for Ethereum? I have run the numbers, I have run the simulation. 33 days is the answer. So here at the x-axis, we've got the duration of the moving average. 33 days gives the best annualized return. And you can simply use that moving average to sell whenever we are below. So you don't even have to bet on falling prices. You can simply just get in cash and then buy back whenever we are above. That is this chart over here. But if you're also betting on falling prices, then we turn from this performance to this performance. This here is a logarithmic chart, right? So this back-tested performance is roughly 100x just buying and holding ETH, while Ethereum just went sideways, following the trends, tended to outperform quite nicely. We can then also optimize leverage, both for the long side and the short side. And then we're moving from this outperformance to this. And that's what I find really attractive. I like to put my money in strategies like this. Yes, we don't know how well they work in the future, but at least those kind of trading rules worked very well in the past. And it's no gut feel, it's no random guessing. It's simply just using things that statistically worked well. That's what I personally do. So there's a Bitcoin trend following strategy. There is an Ethereum trend following strategy. The backtested result for the Ethereum trend follower is higher than for the Bitcoin trend follower. It's 210% yearly outperformance. So we more than triple our ETH stack every year. But again, this is backtested. We don't know if we're getting the same performance going forward. But at least if it's going to be outperformance, that's fine with me. The ETH trend following is set up on a decentralized finance protocol called Gravity. Gravity is the 5th largest perpetual futures exchange. Its trading volume is rising. Its capital on the platform is rising. And across all the trading strategies that are listed on the platform, we are by far the best performer. Everyone else is suffering and the gains go to the few. Here's a development over time, by the way. And so I like those strategies backed by math much more than just trying to follow the news, trying to figure out what's going on. An approach that has worked for years with massive outperformance in the past has a good likelihood, I believe, to continue to work in the future. So I put my money in this as well. If you want to do the same, then feel free to check out the premium membership. It's currently $125 per month. You can simply sign up for one single month, deploy all your capital over here, and then unsubscribe again. You do not have to be subscribed all the time just to deploy your capital. But of course, I'd appreciate if you also check out the tutorial videos. This is where I explain how I manage my money and how I outperform Bitcoin and Ethereum over the long term. If you got some value out of this video, feel free to give this a like. It helps the channel grow. Feel free to check out Premium. Link pops up here on the screen. Thanks for watching. See you next time. Cheers.